What's going on, everybody? Welcome back to another episode of Freedom Investor Radio. I'm your host, John Pearl, and today I am joined by Caleb Johnson, who is the founder of Red Sea Capital. Caleb, how are you?
Doing well, John. Thanks for having me.
Yeah, absolutely. So, Caleb, let's just jump right into it. Let's start with your origin story, how you got into real estate investing. A little bit before the show, we were talking about your why. I also like to hear about people's upbringing. You got into entrepreneurship and real estate investing at an early age. I like to hear what drove you down that path versus taking a more traditional route. Like I myself was raised by W-2 parents, and I had to discover it on my own a little later in life. So what was your origin story like in that regard?
So I started investing when I was 19 years old, and my origin story really is both of my parents had day jobs. And so I did not have the entrepreneur bug seated in me at a young age. What I did see was my parents and what they had through their jobs, and I knew I did not want that for myself. So going through high school, I was pretty introverted, weirdly introverted, to where I would walk. It was a big school, so I would probably walk a half a mile out of my way to just avoid as many people as I could. But I got to the point of being sick and tired of being sick and tired of being so miserable and just unhappy. Um, I decided I got to change. God, please help me change. And so from that point, my life actually did start to change. So I think once I got sick and tired of being sick and tired, that was a catalyst in my life. And around the age of 18, 19 years old, I had done some multi-level marketing. So that was my first business when I was 18, and had a couple jobs, was working as a manager at a barbecue restaurant. And I got wind of this real estate thing. I learned that 90% of millionaires had gotten their millions through real estate. And I thought that was crazy. If there's 90% of the wealthy have gotten their wealth through this one avenue, those are pretty good odds. So if I want to be wealthy, I've got to follow that. And around that time, my mom had both of her knees replaced. So she had surgery. She took off work for about 3 months, lived off of her savings so that she had some time to recover. But at the end of 3 months, she couldn't afford to continue to live off of her savings. She was around 60 years old at that time, and she just couldn't continue to plan for retirement. So she went back to work. When she's an occupational therapist, so she was on her feet for 6 hours a day. And John, I would see her come home and crying in tears just because of so much pain and stress. And that moved me. And again, really emphasized that I saw what my parents had. I saw this job had control of them. And especially my mom, to where she had to go back to this job to get some income, even though she wasn't physically fit to. And it also planted a seed into me to help her retire. I wanted to help her retire sooner or on time. And that was my why getting into it. And then from there, just leverage free resources like Bigger Pockets and YouTube.
Oh, it's great. Having a strong why makes this whole journey much easier to stay on track. And so, as an 18, 19-year-old, when you're getting started in this, you mentioned you had a couple jobs previous to that, but what does a teenager do to break into the real estate investing space? You mentioned you leverage the free resources, which is great, but there's a big misconception that you have to have a ton of money to get into real estate investing. Were you sitting on piles of cash at this time, or were you having to provide value in another way?
Yeah, I was definitely not sitting on piles of cash. So on Bigger Pockets, they talk about this term called house hacking, which, is you live, let's say, in a duplex, threeplex, or fourplex, and you live in one unit, rent out the other 3 units. And since you're living on site, you're able to get really favorable terms on the financing side. So for 3.5% for the down payment, which in my case was about $10,000 to $15,000. So I found this property. It was in a C minus area. My mentor helped me find that property, who was a real estate agent. And that was how I really got started with about $15,000. And it got to the point where I knew enough right? I had been learning this real estate stuff for about a year and just self-educating myself, and I knew what to do, right? If you educate yourself long enough, you'll know what to do. You hear it over and over again, and there becomes a point where you just got to take action. And for me, I didn't have $20,000 in the bank for the renovation. I was just really, I had some money, but I was just going to step it here and there. So I just decided to take action, and that was the first deal for me.
Got it. Now, you mentioned a couple really good things there. Now, where did you find this mentor that you mentioned, and how did you build a relationship with them?
So the way I met my mentor was I was working at the restaurant, and this gentleman came in the door. He was talking with my friend, and long story short, my friend got two business cards of this guy. He said, "Hey, this guy was just telling me he's a real estate agent. He owns rental properties and it's a great time to buy and all this stuff." And so my friend gave me one of those business cards, and I held on to it for 3 months. I didn't do anything with it. But I heard this term on Bigger Pockets that you've got to find a mentor. You've got to find someone that can be in your corner that can really help you get started. And so I got to the point where I just called him up. I said, "Hey, Gilbert, this is so and so. You came into this restaurant. I know what you do. I want to get into real estate. I'll work for you for free. I'll clean your toilets at 2 a.m. I know your rentals are like an hour away. I don't care. I just want to learn how to do this." And he kind of chuckled and he said, "Okay, go ahead and read Rich Dad Poor Dad 6 times and then call me back." So we actually did that. So I called him back after a week, and he did that to me 2 more times with another book and then a short video, because he'd gotten those calls so often. He was just kind of vetting me out. So many people will say they want to do something, but they don't take action. And so 9 out of 10 people will be that person that doesn't take action. But if you're the 10%, that one person that does, you can really differentiate yourself out of the crowd. So that's how I got to meet him. And we built a relationship over time. And we were both Christians, and he was an agent. So it was a great relationship to have, because he also introduced me to lenders, contractors that could help me with some stuff I didn't know how to do. And that's how I built that relationship with him.
Got it. It's interesting because what you did, you offered to work for free, was one of the primary principles that comes out of Rich Dad Poor Dad. You didn't know yet at the time, but that's super interesting and excellent. So I imagine that relationship you built with him was what led to the property that you ultimately purchased for the house hack. Is that correct?
That's right.
Got it. Okay, so talk about the house hack a little bit. This is an area that I wish I would have discovered when I was a little younger, before I got a wife and kids. I could still do it for sure, but it's a lot more difficult when you have little ones running around.
It
So
is.
tell us a little bit about that process. What it was like for you, maybe some of the difficulties, challenges, how you overcame them.
So buying the property was fairly easy. We found it in this market that was probably 40 miles outside of Phoenix, which is the capital. And so a C minus neighborhood. But C minus neighborhoods and D minus neighborhoods are well known for cash flow. And this was actually in the path of progress. So if your listeners aren't familiar with what that term means, the path of progress, it's just there's some development, new things are happening, the value prices are increasing. And so your property is kind of in line, and so it's really close to that. So your property value will likely go up since you're so close to that new construction, that new development. So the challenges for me came, I think, 5 days after I acquired the property. This gentleman's lease was going to be due in 30 days. So I was going to hand him a non renewal notice to move out. And so I was 20 years old. I'm going to give this gentleman who was about 80 years old, and he was a hoarder. So he had 7 people living in this 2 bed, 1 bath with mice, roaches, and it just wasn't a good situation for even the people living there. Just wasn't healthy. And the reason I needed to get that unit clear was because I was going to renovate it and increase the rent. That was my business plan. But I was still so scared. I'm putting this guy on the street is kind of the mentality or the thought that I had. And what pushed me through that was just thinking, I'm doing this for mom. This is the first step. I have to do it. I can't buy this property and then just sit here and not do this. So I gave them that notice and ended up having to do cash for keys because he ended up breaking his hip 2 weeks after that. So his druggy son was running the show. So I did cash for keys for like $100.
Tell
And
us about
man,
cash for keys.
yeah, cash for keys is when a tenant, let's say, won't move out, and you say, "Hey, I don't want to go through eviction process because it's going to cost you poor credit, and so I'll pay you $100, $500. Just give me the keys and get out." And so that's a really good way. If you have that tenant that doesn't want to move out, that's usually motivating for them. So the other tenant was a drug dealer. And so there were some challenges there. But through that property, I renovated that first unit that the hoarder was living in, and they had lived there for 7 years. Imagine there's yellow cake on the popcorn ceiling, and I had to scrape it off, breathe it in. So it was a great learning lesson. And I spent about $7,000, and it took me 2 months to renovate this 2 bed, 1 bath. The drug dealer moved out, and it cost me $7,000, and I paid someone else to do it, and it took him 2 weeks. And then I learned I'm not a handyman. I don't do that. I'd much rather pay it out.
Got it. So yeah, it's great when you come to the realization that other people can do things better and more efficiently, and you don't have to do it all yourself. The who, not how, right? You jumped from the house hack all the way up to now you have multiple double-digit properties under management right now. Tell us how you went from that property to purchasing larger multifamily properties.
So what ultimately pushed me there was I went to a real estate meetup that was an apartment meetup. And before that time, I had thought that I would gain some residential experience for about 5 years and then scale into commercial real estate. And I went to this meetup, this gentleman who had about $150 million in assets under management. He changed my mindset in 2 ways. One was he said, "You're going to be green regardless of when you start in commercial. You could have no residential experience and start in commercial, or you could have 10 years of residential experience and it'll pretty much be the same thing because residential and commercial are two completely different animals." So that threw out, I have to have 5 years of experience. That threw that out the window. The second thing he shared with me was his first deal. He bought this property with some partners, and after 5 years, they exited, and he made $2 million alone. So 5 years, one deal. I was thinking, there's no way I can do that in residential. If I really want wealth, right? You can, so wealth meaning millions of dollars in the bank, some larger checks. Commercial real estate is where it's at. So that's what catapulted me into that and got me really motivated.
Got it. So you mentioned you can be in residential as long as you want, and then it's still going to be like you're a beginner once you scale into the larger stuff. What are some of those key differences that make it that way?
Well, it's a couple things. So I'll talk about two. One is it's value different. So if I own a home, the valuation is dependent upon the comps in the neighborhood, right? If my neighbor's house sold for $200,000, my price isn't going to fluctuate much from that 200 grand. And also, the second thing is commercials operated more like a business. If I own a single family home, it's 20 minutes from my home. I'm tied to that. The tenant has a problem, I go over there and fix it. With a business, I pay someone the property management fees, all of that expense is built into it. And I might have a property management call once a week, once every other week, manage the property manager. And it's just more operated like a business and it's more scalable.
Got it. Okay. So you scaled up. Tell us about how you acquired your first larger multifamily property and what that process was like.
So my first property was a 16 unit and it was in Oklahoma City, Oklahoma. And the way I started was I went to LoopNet in Crexie and I looked at all the brokers that had properties listed there. I wrote down their names, contact information, and I called all of them. I said, "Hey, John, this is Caleb. I'm acquiring properties that are from 10 to 30 units in this market. Do you know anyone that's willing to sell?" And I did that. That's how I got started. And the broker I called, she said, yeah, I know this guy that was going to sell 2 years ago. La di da di da. About 3 weeks later, we were under contract of that property. And it's so funny whenever you underwrite deals, there's so many that don't work. So when one is green and it does work, you're like, what did I do wrong? But the basis was really good. There was a lot of value add opportunity and just really turned into a great deal.
Excellent. So why Oklahoma City? Why did you zero in on that market right off the bat?
So at the time, I was working for an LO, a loan officer. And so I was the LOA. And he had a lot of investing experience, about 20 years. And a lot of his clients were investors. And he said, hey, man, I see a lot of my investors moving their capital to Oklahoma. We should check that out. And so we actually went on like LoopNet and Crexy and saw these properties that were like $50,000, $60,000 a door. And rents are 800. And so you're already beating the 1% rule. And I'm in Phoenix. It's more of a lower cap rate market. And Oklahoma's more of an 8 or a 7 cap market normally. So I was like cash flow all day. And that was really my goal.
Got it. So you took down that property, looks like in February of 2022. And then next one came in June. Next one came in July, 30 units, 40 units. That's quick scaling. A lot of people will be scared away by that. What's going through your head while that's all going on?
Well, earlier, I had been working my butt off for, let's say, 12, 15 months, trying to get a deal done. I tried to raise capital. That didn't go as well as I thought it would. I tried doing a meetup to generate deals, some opportunities. That didn't really happen. And so I had also been building relationships with potential partners. And one in particular, I actually met at that first real estate meetup, and he taught me underwriting. And so I had been working hard trying to raise capital. And when that didn't work, I switched to underwriting and sourcing off market properties. And so you hear the old adage, a bamboo tree you water it for 4.5 years, it grows 18 inches. You continue to water it for another 6 months, it grows 60 feet. So did it grow in the last 6 months that long, or was it growing for that whole time, that first 4.5 years when you were watering it consistently? And that's what happened, man. It was just over time build up, and we were just ready to scale when the opportunities presented themselves.
Got it. So tell us about some of those deals. What are some highlights that stick out to you? Are you purchasing these on your own, or are you bringing in partners to raise capital from syndications? Tell us a little bit about how the deals are going.
So every deal is deal dependent. And so if we can structure it like a joint venture, we will. Or if we need to go a syndication route, we will. We're just wanting to invest in markets that we already had relationships with property managers, or we already owned in that market. So that's what kind of turned us on. We have a couple assets in New Mexico. We're also invested in looking at properties in Texas. I feel like everyone's moving to Texas because there's so many jobs going there. So that's how we structure those deals. And we'll use community bank financing because what we've found is they generally have the best terms, they're more flexible, and that's our process on that.
Got it. What does it look like? What's your process like when you're going into different markets and building out the necessary team members? What's your process like for that?
Well, I'll first want to know the market's a good market that I want to invest in, and then I start calling property managers. I want to build those relationships before I even have an offering, because every market, the expenses vary. I'll give you an example. In Oklahoma, payroll is about $1,150 per door. That's what my property manager has quoted me. In Texas, it's $1,350, just because you have to pay higher amounts for the same amount of staff. So I developed that relationship with property managers and then lenders, and to kind of see where rates are going to fall and have some backups if I need them. And then from there, I start looking for deals. I still also want to state for like where the market is, right? I'm not going to think, oh, I'm going to build relationships in California. I need a property manager and a lender. And I know I'm just not going to invest there. So I want to make sure price per door, it's a cash flowing market for us. And then I'll start building those relationships and then we'll start sourcing those deals.
Got it. So what are some things that you are paying attention to right now moving forward? Some indicators that you're looking at as you are looking for your next deal or looking for your next market? Talk about that.
So the biggest thing we're looking at right now is job growth, job growth, job growth. So David Lindahl wrote an amazing book called Emerging Real Estate Markets. And that's one thing he talks about is you want to invest in a market that has great job growth, projected job growth. And so you can actually go to the Bureau of Labor Statistics and look at projected job growth. I ended up having to call them directly and actually finding that link. But we want to invest in markets that have projected job growth because more jobs means more people are moving there, which also means rents are going to go up. And so once you find that, that's the first thing we look for. And then I'm going to call the city and say, hey, John, my name is Caleb. I'm looking to plant some capital in Massachusetts or Pennsylvania, your market there. And I'm just curious, what incentives are you giving business owners to move there? Are you giving tax incentives? I've heard of some cities, they'll give the first 10 years. If it's a vacant property and you renovate it, your first 10 years, it's tax free. And so that's huge for a big corporation, let's say Toyota or some big corporation, Amazon wants to move there and they know those things going into that. And so that's really also going to incentivize job growth. So those are the two things we look for.
Got it. So there's a lot of interesting things happening right now. Are we in a recession? Is there a recession on the horizon? Depending on the way you look at it, the answer could be different, but is 2023 a great year to invest in real estate or a terrible year? What are your thoughts?
I think it's a great year. Of course, you need to know what you're doing and just don't buy a bad deal. Anyone can do that. But I think there's a lot of opportunity on the horizon because so many people got into these deals that they got themselves into hot water. They bought too high. They got bridge financing that only gives them a 24, 36-month window. And so those loans are starting to come due. And we're going to see a lot of people forced to sell because they could either refinance and it's going to be a cash in refinance, not a cash out. So they're going to have to do a capital call or they won't be able to finance it at all. They're too underwater and the market just isn't where it was, where they thought it would be. And so I think we're going to see a lot of offerings coming available. And that's what I'm hearing a lot of big name guys do. Rod Khleif, David Lindahl, Brian Burke, Gino Barbaro. A lot of these guys are holding on to cash and they're waiting for these opportunities to come available. So I think it's a really exciting time to start still buying now.
Yeah, I'm with you, man. So what about on the tactical side of this? So as a young entrepreneur, what's your kind of day-to-day look like? Maybe your routine that you have? What about some of the operational side of the house, like your workflow? What are some strategies you have to run your business? I imagine a lot of the stuff you do is remote. Let's talk about that side for a little bit.
So daily habits that I have are I do enjoy working out. So I want to get my workout in the morning. My day always seems to go better once I do that. I want to be very involved with giving, spending time at church, volunteering, things like that. I think it's a giving heart's a happy heart. And so there's so many people that are unhappy. And if they just started giving and seeing the reactions of people that they give to, life would change. So on the work side, I use Active Campaign, and that kind of helps with my workflows for potential offerings, for speaking on doing speaking events, and just making sure I don't lose track of a lead. So, and I'll make sure I've gotten in the habit of working for 6 hours a day on my business at least, and that's deep work. And I'll define deep work by what I used to do is I'm going to call these brokers and 20 minutes in, oh, I got to start laundry. So I'll go do laundry for 10 minutes and call some more brokers for here. And I just get distracted so easily. So that's deep work. I'm not leaving my desk for an hour and I'm going to call all these brokers, and it's going to be boom, 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 boom. And it's just incredible to see how my business has grown because of that.
Yeah, man, deep work. Shout out to Cal Newport. I'm not sure if you've read that book, if that's what you're referring to. Yeah, that book changed my life in a lot of ways. If you really pay attention and audit your time and you realize like what you're actually spending your time on, it's kind of mind-boggling, at least for me, how often, if you really pay attention to it, you just get sidetracked and start working on other stuff that 10 minutes ago had nothing to do what you were planning on doing. So yeah, man. Let's see. So what do you think? You seem like a humble guy, but here's your chance to brag. What is your secret sauce? What do you think has given you so much success at a young age compared to other people who are maybe wishing they were in your shoes?
Well, I think what makes me different is that if I quit, it will last forever. So that's a saying that I've adopted, and I'm just not going to quit. If I know that I'm going to do this one thing, I can get kicked in the face however many times. I'm still going to get up, and I'm not going to give up no matter if my partners bail on me. I'm going to stay true to my word, and that's going to be it. And that's a hard stop.
Love it. Yeah, it seems like what I've learned over the years, if you put enough effort and enough time and you fail enough times and you apply lessons from those failures, you're going to get there eventually. Just kind of that 3 feet from gold concept. Like a lot of people give up when they're almost there, when you just need to keep going a little bit longer. So yeah, that's great. All right.
And the only way you lose is when you quit.
Exactly. And I've had a number of moments in my life where when I was younger, where I quit something, and I'm not one of those guys that I can say where I never quit anything, and I always regretted it. And so I've taken those lessons from the times that I did quit thing when I was younger, and it's not happening anymore. I'll tell you that much. But let's see. So time for one more question. It's a question I ask all my guests. I kind of gave you a little prompt for it at the beginning of the show. Little background. I work at Diablo Canyon Nuclear Power Plant. They have announced that they're going to be shutting down over the course of the next few years, whether that's 2030 or at some point beyond. Bottom line, doesn't change my intent to get out of there and be a full-time real estate investor. What's your one piece of advice you would offer to folks who want to escape their current situation, whether it's W-2 world, whatever it may be, and they want to become a full-time real estate investor or entrepreneur?
So I had a friend who had just left his job, and he probably left it about 2 years ago. And we got dinner, him and his wife. And I said, man, I've been investing for 4 or 5 years. How did you end up doing it? Tell me, what did it take? And he said, Caleb, I think you're resourceful enough that you can just quit and you'll figure it out. And I thought, so I could quit today and I'll just figure it out. Now, I don't want people to start quitting their jobs and just think, oh, Caleb said we're going to figure it out. You guys are listening to this podcast, so you guys are different from the rest, right? You want to learn, you want to grow, you want to be better people. And so I believe you guys can make that happen. So that was what happened for me. 3 months after that, I left my day job, and I've been job free ever since. And I think it just comes down to, got to take the step, because I always wanted to have 5,000 months of passive income, or I wanted to have 100 grand in the bank because I could survive for X amount of years. And it just comes down to, you got to take a risk. And what's the worst thing that can happen? You go back to your job. And honestly, when you think about it like that and just ask yourself, what's the worst thing that could happen? And actually be serious about that. Write that down, write down those answers, and say, what's so bad about that? And I think you'll really surprise yourself.
Love that. All right, Caleb, where can people go if they want to get in touch or want to follow along, learn more about what you're doing?
If people want to learn more about what we're doing, they can check our podcast out at From Trial to Triumph. And I interview people who have gone through tremendous trials and they've come out triumphant. Or you can visit us at redseacapitalgroup.com.
All right, Caleb, truly appreciate your time today. Enjoyed chatting with you. Ladies and gentlemen, Caleb Johnson, thanks so much.
Cool. Thanks, John. Thanks, everybody.